At the time of recording this video, Brent Crude Oil was loitering around the illustrious £100 per barrel mark after reaching the staggering heights of £132. I analysed whether this was a good time to buy or if external factors working for oil prices were beginning to fade away. Welcome to our market analysis videos here at Zenfinex. For those who are new to the channel, my name is Connor, the Senior Market Analyst at the company, who provides to you daily videos on market analysis and educational content. And the aim of today's video is to go through a fundamental analysis of oil and also show you a buying opportunity that was shared in our Discord channel. And if you're not in the Discord channel, please drop your comments in on the comment section and I can get you added. Now, during my last oil forecast video, I provided an update to the deeply saddening events coming out of Ukraine, as this is heavily influencing oil prices at the moment, and I will keep providing those updates for you if you're finding them valuable. But today's update does not really get much better in terms of from a violence perspective, with lives continuing to be lost on a daily basis, quite needlessly really. However, there is some optimism now in the markets around peace talks at the moment, with the Russian army continuing to be bogged down, but making slow progress, costing millions and billions of dollars in this war. It was reported Ukraine were offered to have an Austrian-style neutrality to them. Both parties, though, still remain quite distant really in their negotiations for peace, and this is a factor which favours oil remaining above that £100 per barrel mark. Now, how are sanctions affecting the price? Well, the UK only imports 6% of oil from Russia, so it's not really as dependent as other European countries. However, the price is still affected by global shifts in price of oil denoted in dollars. Analysts spoke with MPs, UK analysts spoke with MPs on the Treasury Committee on Monday, and they seem to believe that the recent fall was only temporary. Essentially, the greater loss of Russian oil to the global market, the higher the price will go, at least for the next few weeks or months. Therefore, the outcome of this war really is critical. I can't place enough emphasis on it. The more Putin presses Ukraine, the harsher the sanctions are likely to be, and the more damaging to the global oil market this will be. This, of course, works the other way around as well, which is why it's important to keep up to date with the current affairs in the war. Now, looking at the demand and really the supply outlook as well, it still remains high, the demand outlook. Countries are experiencing high inflation. The global economy is bouncing back quite admirably, really. The supply of oil was already struggling to keep up with demand before this war broke out, but how can it cope now? Well, higher prices will damage demand in the long term, that's a fact, and therefore the switch to other sources of oil may be accelerated in these times, but in the short term the pressure will be on the likes of the OPEC to increase supply levels, increase reserves, and maybe tap some strategic reserves as well, which they have tried, but it didn't really make much effect. To conclude, this likely means oil prices haven't seen their peak yet, if I'm being completely honest. Even after the aggression calms down, the world will want Putin to pay for his actions. This is likely to keep sanctions in place, with even some believing this is going to turn into another Cold War. I'm leaning towards that side as well. This all leaves oil prices vulnerable to more hikes. Let's take a look at the chart now. On the chart now for Brent Crude, and we are really getting towards some really interesting times at the moment in terms of the price of Brent Crude Oil. We're actually now below, at the time of recording this video, we're actually below that £100 per barrel mark, and look at what happened. It's really just eradicated all the gains that we've seen really since the beginning of the month, when we actually went all the way up to that 135 level, which for me, first of all, as you know, I always like to mark where my profit targets are going to be. If I'm looking for any buys, my long-term take profit level is going to be this 133 mark. Now, the reason I think we're in such an interesting time is because we're actually at this daily order block level here, and I'll include the wick, and I'll include the other wick as well. Now, I'm looking for this level to hold firm. First of all, in order to pass the first sort of bull case. It needs to hold this level here. If it breaks below, then we may go looking towards some of this price inefficiency that we have in here, which you know I like to mark sometimes as well. It should be said that This 50-day moving average now, if you look how much was trading away from the moving averages, we're now making that move back towards. People who like to trade off of the moving averages, we might be likely to see a bounce from the 50-day moving average around this 95 level. But for me, I'm seeing quite a lot of support coming in at this level as well. If I go onto the 4-hour chart, it may be slightly clearer in terms of what to expect. We'll see we're just trading now below this 200 moving average on the 4-hour chart. If I get rid of them and we have a look at the price action at the moment, I'm a buyer at this level. For me, I'm going to keep it nice and simple. All my stop loss is just sitting below this 90 level. Just on this 90 level really, but just below where we have this liquidity line in here. I think there's likely to be quite a lot of buy stop orders at this level, and I think if we start to make a break below this level, for me that indicates to me that well, not really that we're in a bear market as such, but I think we'll be looking towards something like 80 if we break below this liquidity line in here, because everything else seems to be fairly balanced in terms of price action. So if we bought the market from here at this 98 level and we targeted the 132 level, which was the previous high, we're looking at around a 1 to 4 risk reward trade, which is a really, really nice trade. Alternatively, we may get a break below, because I like to give a balanced forecast, of course. We may get a break below this level. If we do get a break, I'll be looking for a retest of potentially this order block that's going to be left behind here, because if we do get that break below, then this is going to be the last piece of buying pressure that caused it. My take profit to be up here, my stop loss sitting just above, and again that's another 3.45 risk reward trade. So that's what I'm seeing for oil at the moment. I'm favouring upside from now up towards that 130 level, keeping it simple. Stop loss is just below the 90 level, and let's see how we play out. So that's it for oil today, guys. Hope everyone's enjoyed this video. Make sure you like and subscribe to the channel. It does help boost our channel. We appreciate all the support the channel is getting. Make sure you drop your comments in the comment section where you think oil prices are heading. Let me know what you think. Cheers everyone. Bye.